Hello everyone. This is the pre-market report video for today, November 23rd in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, Indian market ended the 3-day losing streak and all three major index closed positive. Nifty was up by 0.46%, Sensex was increased by 0.45% and Bank Nifty increased just 0.26%. Again and again, the market was mainly supported by public sector banks. It increased over 1.5%. While FMCG, IT and metal increased around just 0.5%. But power and realty were the main draggers. They lost around 1% each. For the fourth straight session, FII's net sold shares worth approximately 700 crore rupees. And for the fifth straight session, DII's net bought shares worth approximately 640 crore rupees. Then after our market hours, all European market opened positive and mainly supported by energy stocks. Since day before yesterday, all energy stocks in Europe and US were heavily shorted after the news that released on Wall Street Journal, which we discussed in the yesterday's pre-market video. But one clarification, in that video I mentioned that the report was released by Washington Post, but it's not. Actually, it was released by Wall Street Journal. In the report, they mentioned that OPEC countries are going to increase the oil production by 5 lakhs barrels per day. But today, Saudi Arabia denied the report and they strongly emphasized that OPEC countries are going to cut the production rather than increasing it. And because of this, it pushes all the energy stocks in Europe and US to trade higher. Even it increased the oil as well. In numbers, Brent crude oil is trading at near $88.5 per barrel and WTI crude oil is trading at near $81 per barrel. Then coming to stock market again, UK government released their borrowing report for the October month. Investors were expecting the borrowing to be near of 20 billion pounds, but the borrowing comes as significantly lower of 12.7 billion pounds. This very much supported the UK's major index and also all three European major index and thus closed positive. Then coming to US market, along with the energy stocks rally, FOMC member Federal Reserve Bank of Cleveland's President Meister made the interview comment that the Fed is going to slow down the interest rate increase. But the peak rate might be higher than that of what we anticipated earlier. This is really welcomed by the investors and supported the tech stocks. Then the another positivity was created by the quarterly results released and by the retailer stocks. For example, Best Buy increased over 11%. Because of these three positivity, energy stocks rebound, retailer stocks positive quarterly results and FOMC member interview made the US market's major index to close positive. In the end, Dow Jones up by 1.18%, S&P 500 up by 1.36% and Nasdaq too increased by 1.36%. Basically, this FOMC member interview directly impacted and reduced the 10-year Treasury bond yield. In numbers, it reduced from 3.84% to 3.76%, which is approximately 2% reduction. And thus, that bond yield reduction increased the tech stocks price. It's just a thumb rule. 10-year Treasury bond yield reduction increases the general tech stock value. Apple, Google, Tesla and Facebook increased over 1%, while Amazon and Netflix increased by 0.8 and 0.5% respectively. Then regarding dollar index, it too dropped marginally from 107.7 a day before yesterday, it dropped to near 107 mark. Coming to Indian ADRs and US market, it's too closed positive but not as enthusiastic as US market. For example, ICICI Bank ADR and HDFC Bank ADR closed 0.44% and 0.83% positive. Infosys ADR increased by 0.36%, only Wipro closed very flat. Then regarding SGX Nifty, at present at 3:30 am Indian Standard Time, SGX Nifty closed at 18,350 mark. By equating it along with the Nifty future, we can say it's showing the gap up opening of around 60 to 70 points. Now, before going into the next topic, I like to discuss about the two country level macro. The first one, Indian-Australia Free Trade Agreement. It was pushed through and agreed on the Australian Parliament. So, it is positive for those companies who imports raw materials from Australia and the companies who exports to Australia. At present, the trade between India and Australia is worth around 27 billion US dollars and it is expected to increase over $57 billion in the next 3 years. This is very positive for Indian textile stocks since they can compete against Bangladesh effectively now. Basically, it's positive for all labor-intensive sectors. And to some extent, it's positive for metal sector as well. Even our Commerce Minister Piyush Goyal tweeted that the metal companies to increase the steel exports to Australia. Then the second one is my favorite, TRAI's monthly subscription report. I will attach the link in the description below. If anyone interested, please have a look. It's a very simplified and structured report. Anyway, the summary is Vodafone lost over 40 lakh subscribers, whereas Jio gained over 7 lakh new subscribers and Airtel gained 4 lakh new subscribers. So, this report is clearly negative for Vodafone and to some extent positive for Reliance and Airtel. Also, along with the subscription press release, TRAI brought back the rule that can restrain the television channels with a subscription fee of more than 19 rupees per month as a part of bucket. This is negative news for all television stocks, especially Sun TV. Now coming to stock and sector specifics. Yesterday, Macquarie, an Australian global financial services company, released the report that Jio Finance will become the fifth largest financial services company in terms of net worth behind HDFC Twins, SBI, ICICI Bank and Axis Bank. They also believe, unlike the banks, Jio will focus on consumer and merchant lending, which is a direct business area of Bajaj Finance and Paytm. Because of this report, yesterday Paytm shares lost over 11% in one single day. But the positive news on Reliance stock haven't yet materialized. Then the second news I want to discuss is regarding Vedanta. Their board approves the interim dividend of 17.5 rupees per share and their record date is on 30th November. This is really positive news for that stock, which is also a major contributor on the metal index. Then the next info is about banks. As I raised my concerns in the last 2-3 days, yesterday after the market hours, RBI too raised their concerns regarding the slower deposit growth. I know banking ADR closed positive, but Indian banks needs to find a way for this liquidity crunch. Also today, HDFC, IOC and REC are going to raise the money through bonds worth of 9,200 crore rupees. Generally, it's negative for the market since the long-term money will be concentrated over there rather than into the equity. But the positive news for banks, I mean for that matter even for IT, it's stock high delivery percentage. Yesterday, ICICI Bank stock delivery percentage was over 77% and IT stocks such as Wipro and Infosys delivery percentage was around 70 to 80%. Then there are a couple of pharma related news, don't want to go in detail. If required, please pause the respective screenshot. Negative for Dr. Reddy's due to its US litigation and positive for Glen Pharma for its Pfizer settlement. So, as a summary, there was a positive momentum at the global level based on the US market close, Indian ADRs and HX Nifty. But at present, US future market were showing flat opening. Then, regarding what items we need to look out for, I'll attach the week ahead video link. Please have a look. Now, coming to technical, Nifty forms a long-bodied bullish candle on the daily chart as the closing was higher than the opening level. All websites are mentioned this as a positive news. But on the candlestick, it clearly forms a downside Tasuki gap formation, which is a strong bearish continuation trend. Then Bank Nifty, it forms a upside bearish hammer candle, which generally indicates the bullishness. So, it's kind of mixed at present. One of this is wrong signal, but we need to wait for it. Then coming to moving averages and technical indicators. In both hourly and daily chart for Nifty, at present it's slightly upgraded to buy signal on both moving averages and technical indicators. In case of Bank Nifty, on both hourly and daily chart for both moving averages and technical indicators are still indicating the strong buy signal. Then about RSI, at present for Nifty, the value is 60 and for Bank Nifty, the value is 67.5 and it is still a buy signal. From option change in open interest, almost no new call options were added yesterday. From 18,000 to 18,600, more call options were unwinded. There was a huge number of new put options added at below 18,300 and the maximum new put options were added at 18,200. So, 18,200 is the immediate support. Then from options open interest data, 18,300 and 18,400 got the maximum call options, but 18,300 mark also got the significant put options as well. And because of that, 18,400 is the strong resistance. Then coming to Bank Nifty, we cannot conclude anything based on change in open interest. So based on open interest data, the nearby maximum put option open interest is present at 42,000 and 41,500. Since 42,000 got slightly higher call options as well, thus 41,500 is the immediate support. 42,500 got the maximum call options followed by 43,000. And because of significant put options at 42,500, 43,000 is the strong resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and it will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.